Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello, Namaskar. You're watching BTTV. I'm Tanya Aneja, and with me, as always, is Shail Bhatnagar, our markets editor. Well, Indian markets have been on a roll this year, but what should be your strategy for the last trading week of this year, and where are the markets headed going forward? We'll discuss this and much more, but first, let's do one thing. Let's take a look at the top headlines this hour. Indian markets are likely to head higher on Monday as they recoup minor losses last week. Global cues are muted, but strong buying momentum on Dalal Street may create fresh demand for blue chips. With just 4 sessions left for 2023, the Nifty is poised to post an all-time high and end the year on a very strong note. The index has surged 18% so far in the year and is likely to gather more steam this week. Cash stocks remain in heavy demand. Caution and stop losses are advised. Very good morning, Shail, and very good morning to all our viewers as well. It's the last trading week of this year, and it's a truncated one, Shail, and we are all refreshed. And if we talk about Indian markets only, they have had stellar run this year, and the index is actually 18% if we see on a yearly basis. But let's understand from you that what should really one expect in 2024, and what do Nifty's moves in 2023 tell us more about equities in general?
Very warm good morning to you, Tanya. It's lovely weather outside in Delhi, and thousands of viewers are not only enjoying this wonderful program, but also investing very, very smartly when it comes to making money in a very sensible, peaceful and how should I say, simple manner. Let's look at what the index has done so far, and when you look at the chart in front of you, you'll see that we are at 21,350. 94 points up on Friday. Of course, Monday was a holiday on Christmas, and only 4 sessions are left as far as 2023 is concerned. We are already up some 18%, as you rightly say. But you know what's interesting in this particular journey, Tanya, that 2 things. One, definitely over the next 3-4 sessions, the Nifty will recoup all its minor losses that it made last week as far as that one single day is concerned, and 21,600 is possibly in the vicinity given the kind of momentum that we are seeing in the market. But 2023 was unique in many matters. If you look at how December has shaped up so far, we are up 7.8% in the month of December, and still 4 trading sessions are remaining. Now, if you look at December alone since 2003, in the last 20 years, it is only one time in 2003 that December showed an exceptional gain of more than 7.8%, which is 16%. So in December of 2003, the Nifty had risen 16%. And for all those watchers who are in the market for the long term, the actual bull run in India started from January of 2004 until January of 2008. We had a remarkable rally. So this is what is likely the event that is about to happen when it comes to the Nifty as far as 2024 is concerned. A lot more data I can give you. Who will run this rally? It will be by Reliance Industries, HDFC Bank and Infosys in particular. Tanya, what's really interesting is that we've seen the index up 18% in the past 11-12 months. But HDFC Bank, Reliance Industries and Infosys, these are the three heaviest weighted counters in the Nifty, about let's say somewhere in the vicinity of 30-32% of index weightages because of these stocks. They have underperformed. HDFC Bank is only up 4.7% year to date. Reliance has added 22.4% over the last 12 months, and Infosys is up 4.3% from January 1st, 2023 till this date. So these are the stocks which have the heaviest weight and have underperformed the Nifty by a large margin. Therefore, the rally from now on will be led by these three companies, and that's the reason why a lot of people are telling us that, you know, blue chips are interesting. One must look at blue chips because frankly they have done nothing at all as far as the main index is concerned, although we are at record highs, and that, you know, proves that how other stocks have contributed so much to this 18% rally on the Nifty. Now, what is most important, Tanya, is that we are headed higher in 2024, but returns will be very, how should I say, difficult to gauge. If we remove the 7.8% of the Nifty and the 5.5% gain given in November by the index, in the 10 months the Nifty did nothing. So 13% of these returns have come in Nifty in November and December. You know, that translates to somewhere like 2,753 points in from October 26th, let's just say November 1st to December 26th. And overall the Nifty has gained 3,500 points. So 2 months have accounted for 78% of the rally, which basically means the Nifty practically did nothing for the first 10 months, in which in 3 months it fell and then it went sideways. So the logic is to be remain, you know, कि हम cash में चले जाएंगे, we will time the market, is all written in books. In reality, you have to remain invested because you really don't know where the returns are going to come and from which date onwards. Of course, you can time them कि भाई चलो इतना low हो गया. If you remember, you know, at the fag end of October, we had suggested let's buy Nifty ETF and Bank Nifty ETF. So this is what I'm trying to say, that remain invested in all of 2024, or in fact in all your life. Just put in money on a monthly basis and let the market do its magic. It's completely unpredictable. In 2023, Nifty fell for just 4 months out of 12, but for 10 months it did nothing. And in 2 months, it gave you 80% of the return. So who can predict it? I don't know. But the best strategy is to remain invested, buy sensibly, buy each month and buy small.
Absolutely, you said it, Shail. And you know, if we look at the levels also, Shail, from the lows of 16,828, which Nifty made in March 2023, the index has added almost 4,500 points over the period of 9 months. And as you rightly pointed out, that if you have invested in quality stocks, then the trick is not to panic and stay invested. So on that wonderful note, let's discuss Nifty Bank also, Shail, because you know, that index faced selling pressure on Friday, but it managed to hold the key support level of 47,400. So let's understand now from you that what are the fresh support and resistance levels for Bank Nifty index.
Okay, now look at the Bank Nifty on a year-to-date basis, Tanya. It's up only 11% compared with the 18% rally on the Nifty alone. We are not even comparing mid-cap Nifty and small-cap Nifty, where the rally is now 45% plus. So the underperformer in this whole setup is the Nifty Bank. When you look at how it's underperformed, the reason is very clear. It is only because of HDFC Bank. that Nifty Bank has been let down terribly. I mean, I cannot even begin to explain the importance of HDFC Bank to Bank Nifty. About 33% of weightage of HDFC Bank, of Bank Nifty, is because of HDFC Bank, which has done absolutely nothing in 2023. It is up just 4.7%. So that's the main thrust. And if you look at how individual stocks have performed, Tanya, nothing has gone right for Bank Nifty when it comes to the individual performances. Kotak, flat, year-to-date gain is 2%. ICICI Bank, year-to-date gain is 13%. SBI, year-to-date gain is 11%. We have discussed HDFC Bank in detail. It is only, Axis Bank in the big private sector setup which has given a gain of something like 20% year to date, and it's at a record high. So ICICI and Axis Bank are at record highs. SBI is also at a record high, but they have done, compared with the other stocks in the large cap space, they have done practically nothing. The top gainer in Bank Nifty for 2023 is PNB, 79% higher, and of course IDFC First Bank, 66% higher, but they have next to nil weightage when it comes to contributing to Bank Nifty's fantastic growth prospect. So Bank Nifty, my understanding is that because HDFC Bank has started to move over the last 1 week or so, the coming few months are really going to be exciting for the Bank Nifty, especially HDFC Bank. Please have no doubts at all that 50,000 on the Bank Nifty should be coming fairly soon. If not in January, then of course somewhere in Feb. So the relative underperformance of the Bank Nifty, Tanya, will be definitely overcome. That's how markets work. It is the swing towards the mean, and that is what we are looking forward to. Bank Nifty and HDFC Bank, Tanya.
Okay, Bank Nifty and HDFC Bank, that's the word coming in. And let's do one thing, Shail. Let's welcome our guest also. We have with us Soni Patnaik, who is the AVP of Derivative Research at JM Financial. Soni, always good to have you on BTTV. Very good morning to you, and I will come to you. But since it's the pre-open session, so I would like to toss it to Shail for the pre-open action. Shail, over to you.
A very good morning to you, Soni. Just give us a minute. We'll just be back with you. So the Nifty is opened in green territory, 18 points higher. When you look at how large caps are performing, Infosys is down 2.8%, 1520. They've announced that a major transaction that was planned has been cancelled by the potential company, and that's the reason why you see this downdraft. What's in the green? Let's look at Reliance, 0.23% higher, 2571, and of course HDFC Bank, 0.1% higher, 1672. Let's just watch one more stock in particular, which is Paytm. News came in during market hours yesterday over the weekend that the company has decided to do away with the services of 1,000 of their existing staff. At the moment, Paytm has opened flat at 643 in the pre-open trade. Over to you, Soni. Any two stocks that you like in the markets as of now, given the momentum that we are seeing in large caps, mid caps, and small caps?
Good morning, Sharinto and Sakshi, and thank you so much for having me on this show. So if the two picks would be one from the auto space, which is Tata Motors, we have seen quite aggressive long-term positions on Friday. Plus, it's starting with decent rollovers, and also understanding that Tata Motors has a very strong base of 700 that it has formed. It has seen those long-term positions taking place. So for targets of 770, 780, you can enter in Tata Motors, keeping a stop loss of 710. The second pick is from the metal space, which is Hindalco. Again, same structure, very strong, long-term positions and good. Assuming that it's about to give that fresh technical breakout. So Hindalco also is a buy from current levels, keeping a small stop loss of 559 and targets of 590.
Okay, absolutely. And let's discuss Infosys also, Soni, because the company will be in focus today. and it has announced that the undisclosed global company, which had previously signed a $1.5 million deal with Infosys, has now decided to terminate the MOU. So clearly not a positive, trigger for Infosys. What are your thoughts, and what do the technical charts suggest?
So Infi, I can see that it is decent. However, it's in a consolidation range. 1520 is a good support. If 1520, 1500 level is getting held up even after this news, and it may see it bouncing back again to 1540, 1560 levels, provided that it sees a dip first. On the higher side, 1600 is a strong resistance. It'll take some time to cross that resistance, but as of now, it is this 100 points of sideways trend for emphasis.
Okay, and what about Tata Motors, Sony? Because I think we should talk about Tata Motors as well. It's the Nifty's best stock, up around 90%, around 90% on a year-to-date basis, and 6 months, if you also see, it's up around 30%. So, what do the technical charts suggest? Will the momentum continue?
Right. So just like I mentioned, Tata Motors, very good technical structure. It has a strong support of 700 for a positional play. And, it's seen good it's starting with decent rollovers. It's seeing long built a position. So Tata Motors from current level also is a buy. 710 is your stop loss. And you can see higher levels of 770, 780.
Okay, let's pay a little more attention to how markets have opened. Nifty is settled about 15 points higher, 21,365. To you, Sony, we've just got 4 sessions left in what has been a fantastic 2023. Do you see Nifty climbing above 21,593?
So if we start with the rollovers, Nifty is indicating at higher rollovers. It started with 33% rollovers as compared to 22, 27% on average that we've seen in the last two series. So it's indicating that it's on a positive side. As long as 21,000 level remains intact for Nifty, the bulls will continue to have an upper hand and try to break that resistance of 21,600. If we look at the options metrics, your call writing is actually a 22,000 call option. So it is indicating that once 21,600 resistance is broken, it will definitely try to head towards that 22,000 mark. It may so happen, at the end of this expiry or early next week also. You just have to watch out for the levels. So 21,600 plays out to be a very crucial resistance. If it's crossed, then we should see it heading towards 22K mark. On the downside, very important support is at 21,000.
Okay, let's look at the PSU basket. How has that opened? Bama Lorry, remember this was a stock that rose almost 20% on Friday, has gained another 6% in pre-open rate, 238.25. BEL is up 1.8%, 178. We also have a strong move coming in NTPC, 1.2% higher, 306.45. Let's look at the other defense play, BDL 1587, 1% higher, and of course you have PNB 0.84% higher, 90. What are you watching, Tanya?
Well, I think, Shail, I want to ask something to Sony. And Sony, that question is that if you have to select one pick each from large cap, mid cap, and small cap, which picks would you suggest from each category?
Right. So from large cap, it will come out to be Wipro. Wipro has
Okay.
seen very strong weekly charts. That breakout has come in Wipro, and it was always getting supported by that 430, 425 as a support band. So as long as on the low side 425 is holding, it will continue to test 480, 485 levels on the higher side. So Wipro is the first pick from the large cap, which is looking quite strong, when we put it from that space entirely. So IT is also looking positive. Mid cap IT is also good. In fact, from the mid cap space, again, it'll be from the IT space again, because Birla Soft is that stock which is continuing to trade above 700 level. It is forming that support base of 700, and as long as it holds that level, it will definitely try to test 800 plus levels. So from the mid cap space, it has to be Birla Soft. again both IT picks, because IT we believe that has a lot of space to outperform in the coming series, depending on how the rollovers are happening. And for short term also, Birla Soft I can see 725 is a very good support. As long as it is holding for near term 725, it will definitely try to test 780 plus levels.
Okay, Birla Soft, Wipro, and which is the third one, Sony?
So as of now, I'll stick to these two. It's just that we'll try to not get a
Okay.
very aggressive trades as
Okay.
long as market's broken out of its consolidation range.
Okay, no worries. So Birla Soft and Wipro, keep an eye out on these two stocks. But what about HDFC Bank? Sony, we were discussing this in the beginning of the show that this stock has actually not performed much. If you see on a year-to-date basis, 2.74% return, 6 months also 2%, 1 month 9%. What do the technical charts suggest?
So HDFC Bank is decent. It is going to consolidate in a very small range, 1640 and 1700. So this is a very small range for the remainder of this expiry. Only because this is going to consolidate, it will also drag Bank Nifty down into not crossing its resistances on the higher side. So HDFC Bank, only the moment it's crossed above 1700, where call writers are very aggressively placed, you can see sharp short covering happening above that level. So 1700 plays a crucial level. If it's able to close that, close above that, you can see HDFC Bank testing 1740, 1750 levels also in near term.
Okay, absolutely. So that was HDFC Bank. But on that note, let's take a quick break. Lots more coming up on the other side. Don't go anywhere. Stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back to Market Today. Let's look at how pre-open rates have settled. We are seeing a green tick on Bajaj Finance and Axis Bank as far as index heavyweights are concerned, 1094, 17, 73.40. Remember, we also have three listings today, which is, of course, Muthoot Microfinance. We also have the listings of two other companies, which are Suraj Estate and Moti Sons. Okay, we have the initial prices. The index has opened 11 points higher, 21,357 as far as the Nifty is concerned. There's a mild green tick on Nifty Bank, flat actually. The worst hit is Nifty IT, and that's because of two news items that are coming, both on Infosys as well as Wipro. Let's look at how these stocks have opened. Infosys is down 2.3%, 1525. The company informed that one of its planned transactions worth $1.5 billion is not going forward. Okay. What else is in the green? Reliance up 0.4%, 2573. HDFC Bank flat for the moment, 1670. The Nifty is down -8 at 21,343. What's buzzing in the green? Let's look at the corporate banks. ICICI Bank flat, 992.70. Axis Bank in the green, 0.2% higher, 1091. So it's a mixed trend when it comes to the index heavyweights. Let's shift focus and look at what's happening in the F&O space, minus what has happened in the index heavyweights. Okay, top gainers. BEL 179.40, fresh record high, 2.5% higher. Hind Copper 2.6% higher, 232. It's going to be a day when it comes to PSU basket. Sale 0.6% higher, 113.45. NTPC 0.9% higher, 305.6. Let's look at NSE 500. Okay, all cargo logistics. This is the top gainer, 7% higher, 329. The reason being that there is a merger planned with its subsidiary Gati. Saregama 3.5% higher, 361.85. Let's look at the Nifty again, and it's up in the green, 20 points higher. Which are the stocks that are gaining? UPL, the company announced a 4,000 crore rupee rights issue, 592.60, 1.8% higher. Remember, this is the biggest loser in the index as far as Nifty is concerned for the year 2023, down 19%. Tata Steel 1.2% higher, 135.15. Tata Consumer, okay, this is a fresh high, 4 digits you are seeing, above 1,000 for the first time, 1% higher. NTPC 1% higher. Let's look at the Nifty mid cap index, and at the moment it's floor chem 2.6% higher, 3661. That's how markets have opened. Let's get back to our panel. Sony is with us. Sony, anything you find interesting as far as stocks are moving?
Right, so I think we can look it into the pharma space as of now. Loris Labs, it has given a very strong breakout last week above 415. So it's at a good risk reward ratio. As long as 415 is holding, it will definitely try to test 435, 440 levels. And that weekly breakout is there, plus long dated positions and very good volumes also. So Loris Labs is breaking out of this range after a very long time. So I think this is one stock which can be kept in focus.
Okay, absolutely. Loris Labs, keep an eye out on this particular stock. But let's talk about some of the other buzzing stocks, Sony. And the company on my radar is HFCL. So if you see, the stock is up around 3.4% as we speak, 84.85. That's the level on this counter. What's next? I mean, what do the technical charts suggest now?
It is continuing to be strong. There is no exhaustion as of now, what the charts are indicating. It has seen a strong W sort of a pattern on weekly charts, and it's heading towards higher levels of 88.8 to 89.5. So I think that's where it can test and then see some sort of profit booking, maybe on a smaller side. On the downside, 80 is a strong support, so it's going to defend that even when it's seeing the profit booking. So as of now, 88, 88.8 can be looked at for the higher targets.
Okay, BEL, that's another stock from Nifty Next 50. 181.50, that's the level on Bharat Electronics, Sony. 4% uptick there. What would you do with the BEL at these levels?
So, we're looking still quite strong. There's positive RSI divergence. It has broken above the resistance of 175, 176. So, anybody is holding it from lower levels can trail the stop losses to 175 and continue to hold the stock. It can test 190 plus.
Okay, let's look at other prices. Of course, BEL is at a record high. While it's early time, it's just 920. Let's look at stocks that have hit all-time highs to begin with. Of course, BEL is there, and within the Nifty 500, it's Shyam Metallics 621, up 2%. Cummins India, this is a large cap stock, 1% higher, 2030. Torrent Pharma, JB Chemicals, and of course Suven Pharma. Suni, there is an underlying theme of strength that is seen in the pharma space as far as markets are concerned. Your first pick was, of course, that was Loris Labs, and now you have strength emerging. You have strength emerging in Torrent Pharma and JB Pharma Chemicals as well. How about the likes of Aurobindo Pharma and this one, Lupin. What are the charts telling you there?
So, Shailendra, if I look at Oro Pharma, it was facing very strong resistance of 1060. It crossed 1060 last week, and on expected lines, it was to test 1100. However, 1100 is a small resistance, if we can see as of now, and 1060, if it is still holding on closing basis, because it's trading below that, so closing level is very important. So, if 1060 does not break on closing basis, it will try to reattempt to test 1100 levels. Moment it crosses 1100, you can see another small extended rally for Oro Pharma towards 1140 odd levels. Positionally is good, the structure is still good. 1060 remains the important level. I think that stock. And coming to Lupin, Lupin also has a good structure technically at from current levels, but 1300 is one resistance. From current levels, for a short-term trading perspective, it is favorable to go for targets of 1300, keeping a small stop loss of 1250.
Okay, so these are the two stocks that we are talking about. Of course, let's look at the broader markets, Tanya. IT, of course, is the top loser. The index is now down 0.6%, 35,414. And surprisingly, this is the only loser. We track 19 indices. Out of 19, 18 are in the green. The top gainer, of course, is the Nifty Metals Index and the Nifty Media Index. Let's look at what the small cap and the mid cap indices are doing. The mid cap 100 is up 0.5%. What's really interesting is the advanced decline. Out of the 100 stocks in the Nifty mid cap index, 81 are in the green. The Nifty small cap index is up 1/3%, and out of 100 small cap stocks, 70 are in the green. The broader NSE 500 has a green uptick, 19,108, nothing much to talk about, but it's the advanced decline that is more impressive. 380 stocks out of 500 are in the green. Overall, on the National Stock Exchange, you have a very smart broad-based rally. 1460 stocks in the green, just 450 in the red. That is how markets are moving. And Tanya, I think it's going to be a defense day. You had picked up BEL very, very early. This is the top gainer, 4.7% higher in the FNO space. But in the cash markets, it's the defense stocks that are moving very, very rapidly. I think apart from BEL, which is up 5%, you have a very, very strong move coming on Mazgaon Docks, 2% higher, 2168. A strong move coming in on Hindustan Aeronautics, 1% higher. We track 4 plus 4 plus 4, about 16 defense stocks, out of which 14 are in the green. And Mazgaon is also moving rapidly. Sony, your view on Mazgaon Docks, 2174.
So the stock is continuing in a very strong uptrend still, and from current levels also it is looking good as it continues to trade above your 10, 20 and 50 EMA. So it's holding on. Immediate support is lying at 10 EMA, which is 2110. So as long as 2110 is holding, it will try to test 2280, 2300 levels. So I think it's looking quite strong with positive RSI divergence and can definitely test 2300 targets.
Okay, absolutely got that, Tony. And let's discuss UPL as well. So this pesticides maker is in focus today because the company has announced that its board has approved a proposal to raise 4,200 crore rupees via rights issue. So if you see the action on this particular stock, it is up around 2% as we speak. 593 is the level where we are at. And if you see the 52-week high, that was 780. So still a long way to go. But what would you do with these, with UPL at these levels, Sony?
So UPL 600 is a resistance. So it should be crossing 600. In fact, 610 is also very strong. So you can see multiple resistances. As long as it's not able to decisively close above 610 on a weekly basis, the stock may remain in a sideways to slightly weak trend. Only if it's crossed 610 on closing basis, it will try to take out its higher resistance of 630. Now that's where lie the key level. So there's a breakout only above 630. So as of now, just avoid, getting into fresh long positions. Support is at 580, so it becomes a good wait and watch for the resistance to be taken out.
Okay, absolutely got that. And let's discuss, Sony, some of the banking names as well. So SBI obviously is in the limelight. It's the top gainer from the Nifty Bank Index. But let's discuss Bank of Baroda as well, Sony, 224.8. That's the level on Bank of Baroda. So where is this stock headed in the near term, according to you?
I think the stock is certainly heading towards 235 to 40 levels in near term. It is also at multi-year breakout. It is continuing above 220 where it confirms its multi-year breakout. So on the 215, 220 is a very good support base. As long as it's defending this range, it will may consolidate for some time, until 228 is taken out. Above 228, you will see a fresh breakout and it can head towards 235 to 40.
So please. Let's look at the broader markets. It's now two stocks that I'd like to discuss with Sony. Both of them showing a fairly decent pickup. This is again from the defense space, Bharat Dynamics. The price at the moment is something like 1613, fresh record high here. Strong momentum coming across the defense space, Sony. Any view you would share on Bharat Dynamics?
It is looking quite strong. Shailendra is 1608, and it's continuing in that upside trajectory. Although it has moved continuously from 1400 plus levels, and its breakout was also 1400. So any dip you can get towards 1500 to 1450 should be the ideal range to re-enter again. One can even book out some profits over here. And on intraday basis, 1580 is a support. 1580 is breaking on intraday and closing below it. So you can expect some profit booking taking place towards 1500. So it's a good structure, positive, but better to enter on dips.
Okay, this is an interesting thought that's coming. I'd again like to mark Paytm. Remember, we are tracking this for a negative news that has come in, which is the 1,000 employees that have been asked to go on this particular company during the weekend. At the moment, 630 to 65 at day's low. What else is moving? SRF. Sorry, this is something that your views are required on. A strong momentum coming in, 3 days of gains, and this is the price that we've seen last in July of 2023. So a 6-month high. What are the charts telling you?
Charts quite strong, positive RSI, positive MACD divergence. It is definitely heading towards 2600, 2630 levels. If it's able to break above 2630, it will indicate at a different fresh breakout. So as of now, from current levels, 2630 is where it can go, as long as it's holding the support of 2450. So I think 2450, good support. You can look for targets of 2600, 2630.
Okay, absolutely. I think, Shell, we should discuss NTPC also, because I remember we discussed this talk somewhere last week, and it was one of our market guests' picks as well. So, coming to you, Sony, for NTPC, the stock is up around 85% if on a year-to-date basis. Right now, 306.6 is the level, 1.25% uptick there. What would you do with NTPC?
NTPC is, looking like it's quite positive. 300 put writers are quite aggressive. So they're going to defend that level even if there is any small dip. So 300 becomes a very good base. There is resistance at 310 because maximum and very aggressive call writers are base. So this series, it may look difficult to cross above 310. It can happen in the next series. But this small range it is going to catch hold on to from 300 to 310 will be a good level to accumulate. And as long as 300 is holding on closing basis, it becomes very important. You can see it testing to break above 310, which most likely will happen in the next series. So it's a good stock to accumulate. You can hold it till 298 as a stop loss, so one can enter and just hold it for a positional basis until it's crossed the resistance.
Okay, absolutely got that. And since it's the defense day today, Sony, so let's discuss Cochin Shipyard as well, Shell. I think this is already a multi-bagger stock, around 150% return on a year-to-date basis. What's
Absolutely.
next for Cochin Shipyard, Sony?
Yeah, Cochin Shipyard is giving that intraday breakout and it is heading towards higher levels. You can see it'll head 1380 for the day, 1380. So it's already given that a breakout and there's positive signs. It is holding above your 10 EMA. So 1280 is strong support. It holds for the day. 1380 is likely possible for the day.
Absolutely. So record high already for Cochin Shipyard and Masdok also, as we pointed out earlier. It is also on a roll today. 2196. That's the level on Masgon Dock. 3.6% uptick there, and the record high for Masdok. The 52-week high is 2483. So let's see how the action pans out going forward. But what are you watching, Shell?
Tanya, it's as I have said, a crisis of plenty. We've discussed three stocks so far. This was a pick coming from Sony Lotus Labs, days high 428. And what's really interesting as far as Lotus Labs is concerned is that it's the top performing stock in the pharma space. A 2.1% rise in Lotus Labs is actually accompanied by a 5% rise in open interest, which basically means that things are going to get better and better as far as data is concerned in the markets. And when you look at this price, it's fairly substantial. This is the highest since 1 year. December 2020 was 2022 was when you saw this price again. So it's a kind of a breakout, and this is accompanied by a sharp rise in the Nifty Pharma Index as well. Let's take a look at this one, because it's the entire pharma space except for a few stocks that is moving. It's a fresh record high on the Nifty Pharma Index, and that is something to be looked at. On Friday, the index had hit 16,500 as an intraday high, but it closed lower. So therefore, we should look forward to more gains coming in here. Hindustan Aeronautics has started to move. I am very hesitant in taking a technical view on this one because the stock has gone up very, very sharply. But to you, Sony, with the required checks and balances, what does HAL say to you on charts?
It looks decent. It is going to attempt towards 2800. Now it has faced some resistances in and around 2800 plus minus 10 points you can take on technical charts. As of now, it's not exactly a very strong buy because it's trying to close and cross that 10 EMA on technicals for the day. As long as it's able to hold above 2720, it can test 2800. So this is for intraday basis. Now if it's sustaining above 2800, you can see it again going towards 2860, 2870 levels. So overall structure is quite positive. It's just the levels to be watched out.
Absolutely. So lots of buzzing stocks we discussed already. Share like Masdok and Lotus Labs. Kudos to you, Sony, for that. BDL we discussed, and then let's discuss Hero Motors also. It is trading above 4,000 odd level, Sony, and this is for the first time since 2017. So 2.5% uptick there on this particular counter. What's next, and what do the technical charts suggest?
So technically, it is a good breakout, and you can see it has crossed the level of 4,000. So, the call writers have definitely exited from that position. They will try to take down the next base of 4080, 4100. So that's where Hero Motors can test. And on the downside, 4,000 is going to be a very strong support for the day. If it closes above it, you can see it taking out higher levels of 4100. So the stock is quite positive, and technical also good breakout. Because it's all positive from all angles, so we can definitely test 4100 plus.
Okay, that's Hero Moto for you. But what's happening in NLC India, Sony? It's up around 7% and fresh high for this particular stock, 243. That's the high it hit. What would you do with NLC India at these levels?
On weekly charts, I can see this is the fourth week where it is continuously giving you that uptrend. There is no signs of exhaustion or profit booking just as of yet. If anybody is holding the stock, would advise to trail your stop losses at 220. That's where your good support is. So if 220 is holding, it can even test 250, 255 levels for the day. And there's no profit booking just as of yet. Only below 220, you will get that confirmation of some immediate profit booking. But as of now, trail your stop losses. Stock is looking still quite strong on charts.
Okay, let's look at another space. We've discussed defense for quite a while, and there is another sub-segment of the market that's doing excellently well, or at least trying to now break out, which is the railway zone. Two stocks are ticking fairly well. Let's look at RITES. RITES at the moment is 3.5% higher, 504.95. What's really interesting is that about 3,34,000 shares have already been traded on RITES, and this seems to be a record high for me. Sony, as you look at the charts, please give us a view, and let me just for the moment check out the 54-week high for RITES. No, there is still time. RITES, according to you, what's happening there?
RITES is looking positive for intraday. However, 520 is the level where it can test. So if it's not able to cross that, you can see it again coming down towards 500, 480 range. So I think it's in a consolidation range from 520 to 480. On the higher side of the range, you can book your profits, re-enter on the lower side. So as long as 520 is not breaking, it does not look that it can go much higher towards its all-time high of 580 plus levels. So important to just wait and watch. 520 is the crucial resistance to be broken.
Okay, so this is one stock that we've tracked. The other one, Tanya, that's moving very sharply will be SGVN, 9135, 1.8% higher, and it's showing fairly decent signs of a continued uptick. We'll take a view on that a little later. What else is moving in the large cap space? Okay, chemical sector, alkyl amines, 2,404. It's up 4.34% already. IOLCP, this used to be a very high beta counter in the chemical space. This is ticking 484, 23.3% higher. Remember, with this sad news of another strain of COVID taking root across many countries, else also in some parts of India, pharma is ticking up across the board. Be that as it may, we are the ones who track price and offer quality stocks to be added to your portfolio. This is what is happening as far as prices are concerned. Another stock, sadly of a high price range, is Torrent Pharma, now 2252. This is on the verge. Yes, this is a fresh breakout that has happened, and the stock hitting a fresh record high, 2252. It's a high ticket item, and generally we don't discuss this much because it's a low beta counter. Just 58,000 shares traded so far, but I'm just marking the price as far as this particular stock is concerned. Nifty absolutely flat. We are at 940, 21,355 for you, up just 6 points. Futures are down 7 points as far as this particular index is concerned. Anything that catches your fancy, Sony, that we may have missed?
Right, definitely. I think I was just looking at Excite. Excite is also, it's consolidating, most likely not for this series. You can see it in the next series. It's breaking. So it's in the range of 280 to 305 on a higher side. It's a broad range, but it's slightly on the higher end of the range because it's at CMP 295. So Excite from current levels, it can test 300, 302 on immediate short intraday basis, and intraday stop loss can be placed at 292. However, positionally this is a good stock. It's starting to see good rollovers, so 305 will be that level of fresh breakout. It's a positional play. The moment it breaks above 305, you can see it heading towards 320, 325 levels.
Okay, absolutely got that. And I think, Shell, we should discuss Gas Authority of India also, because we discussed SAIL, but we didn't discuss GAIL. And Sony, I am discussing this stock because on Friday, this stock not only surpassed its previous swing high, but there was substantial trading volume as well. And today also, if you see, 2.3% uptick there, fresh high for this stock as well for Gas Authority of India. But what would you do with this stock at these levels?
I would first advise, if anybody has taken it from lower levels, trail your stop losses to 151. 151 was a level where it broke to see such high levels. So it's a fresh breakout altogether. Trail your stop losses to 151. As long as it is holding, you can see GAIL testing 162, 164 levels. So these, structure is quite positive. There's very aggressive long build-up positions from Friday that we've seen. Stock is definitely headed higher towards 160 to 164. You can book out your profits and then again wait for a small dip to re-enter. I think that would be how the structure can be seen.
Okay, absolutely. And some of the other stocks that are buzzing, I want to discuss Power Grid with you as well. Let's pull up that stock PCR and let's see how the stock is doing in today's trading session. Okay, 3% up. 1% uptick there on Power Grid, and 233 is the level. So we have been discussing these power stocks lately, Sony, and these stocks have been doing really well. If you see on a YTD basis also, 45% return as far as this stock is concerned, Power Grid. But what do the technical charts suggest now for this particular counter?
Stock is strong above 20 and 50 EMA that I can see, of course, but there's an immediate resistance of 238. I think it might take some time to cross that resistance. It cannot do it on the immediate basis. On the lower side, 225 is a good support. So it is sort of consolidating between 225 to 238. The moment it crosses above 238, it becomes a fresh breakout. So you can accumulate at current levels, keep a stop loss of 225, wait for the 238 breakout to happen, above which the stock can head towards 250.
Okay, let's just mark the broader market. Tanya, we've been focusing on stocks that have been showing a green tick. That necessarily does not mean that there are no losers in the market. Let's just focus on them as well. Markets are made up of both kind of stocks, and it is sensible to look at those that have a red tick. Okay, the top gainer as far as the Nifty is concerned is Infosys, 1534, 1.9% lower, and this comes on decent volumes, 21 lakhs 36,000 shares traded. Wipro, the company, denied the market buzz of an appointment of a very well-known IT personality to join its ranks. The stock is 455, 4% lower, 1.53% down. Remember, this was perhaps the top gainer in the IT space on Friday. HCL Tech, 1448, 1% lower. So the losses on the Nifty are led by tech stocks. Infosys, Wipro, HCL Tech, Tech Mahindra, TCS, representing the IT muscle within the Nifty. All five of them are down. Apart from that, you have a red tick on Maruti and ICICI Bank. Let's shift focus to the F&O space, And apart from IT, you have a red tick on, well, it's IT all the way. Bata, let's discuss Bata, 0.5% lower, 1612. In the top 20 space, it's just IT. Let's just see something else. I want to see what's down in mid cap 100. Paytm we've discussed. Union Bank 1% lower, 117.40. Bank of India 0.5% lower, 111.15. Okay, so the theme of weakness or potential weakness is coming in the Nifty PSU banking basket. 5 of them down in the Nifty PSU banking index. Union Bank, Central Bank, PSP, UCO Bank and Bank of India. Nothing much to worry about because these stocks have gained very rapidly. On the winning side is the entire energy space. Tanya's marked Gas Authority. She's marked NTPC. We've discussed a couple of other stocks. Let's see what the BSE Power Index is doing because that's a very, very strong representation. So BSE Power Index has 4 plus 4 plus 4, 12 plus 1, 13 stocks, out of which 12 are in the green. We've discussed NTPC. We've discussed Tata Power in great detail. The others are also in strong momentum. BEHEL 1% higher, 180.15. NHPC 65.62, 1% higher. So fairly strong momentum across the board when it comes to the green side. Amine stocks are clicking. Balaji Amines and Alkyl Amines. Tanya.
Absolutely. And Shail, you were talking about losers. I used to focus on the stocks with the red tick, but the day I started doing shows with you, I started focusing more on gainers rather than losers. So my bad. But lots more coming on the other side. It's now time for us to take a short break. Sunny Agarwal, who is the head of fundamental desk at SBI Securities, he will join us shortly. So stay tuned. Lots more coming up.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back, ladies and gentlemen, and let's now focus on primary markets because the market is going to remain busy in the last week of this year as well. And we have with us Mr. Sunny Agarwal, who is the head of fundamental desk at SBI Securities. We'll discuss some of the recent listings. But firstly, there will be 3 listings today. Moti Sons Jewellers, Muthoot Microfinance and Suraj Estate Developers. So Moti Sons Jewellers, if you see, the issue was subscribed 151 times. Muthoot 11.52 and Suraj 15.65. So coming quickly to you now, Sunny. Let's discuss firstly your topic from the recent listings.
Yeah, good morning. Thanks for having me on the show. So, if you talk about today's 3 listing, which is Suraj Real Estate, Muthoot Microfinance, and Motis and Jeweler, my topic there would be Muthoot Microfinance. Being a microfinance company, that sector is growing really well. And what I find is that the valuations are really comfortable over Muthoot Microfinance. So, if we see it peer set like Credit Access Grameen or for that matter Fusion, they are trading close to 3.5 to 4 times price to book. and Muthoot was priced at around 1.9, price to book at upper price band. And what I feel is that entire microfinance space is looking pretty good in terms of the loan growth trajectory. And if I have to choose one among the three companies which is going to list today, so Muthoot Microfinance will be one of my top picks today.
Okay. A very warm welcome to you, Sunny. And we've seen a fantastic 2023. Most likely, we'll see a record high on the Nifty before December 31st is out. Anything out of the ordinary that catches your fancy for 2024 in large caps or mid caps that can be added to the portfolio at current levels?
So what I feel at current level among the large cap, the one stock which I like is Castrol India. So I mean it's a kind of techno funda pick from our end, wherein fundamentally the stock is looking decent 4% dividend yield. The recent correction in crude oil prices will definitely help the company in terms of margin expansion. And moving on to the technical side, I think the stock has given a strong breakout above 150 levels. And so what I feel is that if somebody is looking to ride for short to medium term story, one can look at Castrol India as a pick to ride on the short to medium term for 2024. Otherwise, in terms of broader sector, what I feel is that 2024 is the year where one can focus on few stories, the domestic stories like infrastructure, maybe railways, banking space, auto, cement. So entire story around the India infrastructure spending can be looked upon.
Okay. Castrol is a new name that we've added to our list of fundamentally strong stocks. Yes, 167.50. What you see in front of you is not exactly an all-time high, which is very, very distant 280. But yes, what a fantastic dividend paying this company is in terms of an MNC space. And yes, of course, it's very, very sensibly priced as far as the current market rally is concerned. You've seen a price of about 168 rupees on the charts. The PE is 20. And let's just look at another interesting data. Okay, for the last 10 years, ladies and gentlemen, the stock has done nothing. It's given a 1% return each year over the last 10 years. So this is something that you can look at. And in the last 1 year, it has appreciated 43%, which is fine. But it's been a sharp underperformer when it comes to the broader markets over larger time frames. And these are gems that the market has so far failed to appreciate. This is something that can be looked at in terms of a portfolio pick. It's a debt-free company. Cash is about 991 crores on the portfolio and a revenue of about 5,000 crores on a trailing 12-month basis, market capitalization of 16,000 crores. Sunny, what a fantastic pick you've discussed, and this is something that can be looked sensibly into. The metals pack is humming, mostly a lot of government PSUs that were neglected earlier, NMDC, NALCO, Hindustan Copper, Steel Authority, all of them in fine shape. Anything in the private or public sector space in the PSU basket that you find of importance?
Oh, what I feel is that the entire metal space will keep on buzzing because there is a lot of auction which is coming up in the month of January. So lithium mining auction. At the same time, the government has announced that the auction for the critical minerals will be held on close to 24th January. So I think the street is very excited that a few of these PSU companies will definitely win the right to mine those critical minerals for lithium. And my topic over there among the PSU side will be MOIL, Magnese or India Limited MOIL. The reason being that the company has been doing phenomenally well over the last few quarters. And with the increase in steel demand, what I feel is that the demand for manganese will keep on scaling up as far as India growth story is concerned. And hence, MOIL is one of my top picks in the public sector, on the public sector side. On private side, my top pick will be Sham Metallic. So the company has been expanding capacity on both the metals as well as backward integration. Recently, they have commissioned the plant for the aluminum foil, which will be used as in the battery as one of the electrolyzer or a barrier. So Sham Metallic is my pick as far as the private sector in metal space is concerned.
Okay, absolutely got that, Mr. Agarwal. And talking about the listing shell, Muthoot Microfinance made a muted debut. Shares listed at 5% discount, and Suraj Estate at 6% premium. Okay, got that. So this is the action happening on the primary markets. But Mr. Agarwal, coming to you, I was reading a report about the most lucrative IPOs of 2023, and Tata Tech, DOMS, JSW Infra, IRDA, Cello World, these were some of the names in that report. So I want to know it from you that the names that I just mentioned, any picks that you would like to share?
So again, what I feel is that all the names which you mentioned are fairly valued. If I take a fundamental view on all these names, although quality businesses, but trading at an expensive valuation. So Tata Tech, obviously, I would like to add that company in my long-term portfolio. But at 1200 rupees, I mean, I still feel that the valuations are slightly expensive. Maybe buy on deep should be the strategy in Tata Tech, or for that matter, Cello World. IRDA again, indirect play on renewable energy space in India. But again, if I compare the valuation of IRDA versus PFC and REC at current market price, despite of such a large book, PFC and REC is looking cheaper on valuation front. So again, IRDA I would like to buy on deep in my long-term portfolio.
And what about broader markets, Mr. Agarwal? Because since we are discussing picks, so why don't you share one pick each from mid cap and small cap index?
Yeah, so if I have to bet my money on large cap side, I would like to go ahead with safer bet like HDFC Bank, trading close to 2.5 price to book. And anyway, the way there is a rally in the mid cap and small cap side, what I feel is that the risk reward is favorable in a banks like HDFC Bank. All the merger banks may be behind post the December quarter, and FY25 is a year where we may see a healthy loan book growth on a merged entity basis for HDFC Bank. So HDFC Bank will be my pick for a price target of 1900 to 2000 with the investment horizon of 12 to 18 months. And if I had to bet my money on mid cap side, I would like to go ahead with the Kalyan Jeweler. Again, we have to December quarter is a quarter where I feel all the jewelry company will report a fantastic set of results. We have seen bunching up of festival for the this quarter, October, November, December quarter. And Kalyan, very rightly, the strategy which they are playing, wherein they are increasing the contribution of sales from franchisee route, that is leading to the increase in return ratio. So that strategy is playing out very well. And what I feel is that the current ROE which the company is commanding around 13%, the ROE will expand to 18% over the next 2 years. So again, Kalyan Jeweler can be added with a price target of 380 to 400 over the period of with investment horizon of 12 to 18 months.
Okay, sensible picks coming in from Sunny. We've discussed Castrol within the MNC space, manganese ore in the PSU metals basket, and of course this one when it comes to the mid-cap space, and in fact the biggest one of them all, HDFC Bank. So these are the ones that you can add to your portfolio. Some have been very, very sharp underperformers. If you look at HDFC Bank, it's up just 4.7% in 2023 compared with the 18% rise on the Nifty. So sheer underperformance, and that's likely to be breached. That will also push the Nifty higher because HDFC Bank has the highest weighted counter in the index. What else is moving? You've seen a series of listings which have been muted as far as markets are concerned. This is a very, very good sign that some sanity seems to be coming back in the primary markets. And with that, let's now look at the Nifty. Days high, almost 20,400 in front of you. Yes, it's 20,400, 53 points higher. And this move is backed by a strong sense of traction coming in most index heavyweights minus the IT setup. So the top gainer within the index heavyweights at the moment is Reliance, 4.3% higher, 2573. We have HDFC Bank flat, 1671. But about 8 out of 10 index heavyweights are in the green on this fabulous Tuesday morning, Tanya.
Absolutely, got that, Shail. But Mr. Agarwal, last question to you before we wrap up this edition. We were discussing this IT stocks and large cap ITs and the mid cap ITs. Of course, some of the large cap ITs have been hogging the limelight. They were in focus last week. And of course, mid cap ITs, they have been outperforming, I would say, and how. So I want to know it from you, any picks that you would like to share for 2024 from the IT pack, whether it's large cap, mid cap?
So again, I would like to hold my bet till for next 15 days. As we all know that all the IT companies will start posting result post 10th of January. And I would like to see the commentary of management on demand environment, especially in US and European market. So we all know that on a relative basis, in terms of financial performance, mid-cap IT companies are doing outperforming the large cap peers. But if I look at value from a valuation perspective, what I feel is that large cap IT companies are placed at a favorable valuation. And however, if I would still want to bet my money, so I would like to bet my money on SCL Tech, which looks relatively cheaper in terms of valuation. And on mid cap IT space, I would like to bet my money on KPIT Technology, which is an indirect play on automotive industry, especially on electric vehicle side. So KPIT, but again on KPIT, the valuations are slightly stretched. So buy on dip should be the approach as far as KPIT is concerned.
Okay, buy on dips, that's the strategy. And on that wonderful note, thank you so much, Mr. Agarwal, and of course, Shail, for being with us here on BTTV and sharing all these excellent ideas with us. With that, ladies and gentlemen, it's time now for us to wrap up this edition of Market Today. But let's see how the action pans out going forward. Lots more coming up for you. You don't have to go anywhere. Stay tuned to BTTV, and many thanks for watching.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Well, 2023 has been an exciting year for the Ministry of Consumer Affairs, with a whole lot of decisions coming in for the benefit of consumers. And of course, 3 to 4 contentious issues have also been solved by the ministry. But today, I am joined by the Secretary, Department of Consumer Affairs, Mr. Rohit Kumar Singh, to